What is up, everyone? Welcome back to the trading world. Today is September 4th, 2025. Today is Thursday, and we're going to be reviewing all kinds of trades you could take in the NASDAQ futures market to make real money. If you guys like this type of content, definitely consider subscribing, leaving a like, following me on X, and checking out my completely free Discord. The link to that is in my bio. Let's go ahead and review price action today. First, I want to talk about I think this is Sotep's account. He might have changed his name to Max because his chart colors are the exact same, but he's been catching some really clean inverse value gap trades, and I don't know, it just kind of feels like he deserves a shout out because this is all you need to be profitable, guys. And I know sometimes I overcomplicate it, sometimes I try and make it super complicated, but I just want you to look at his P&L, right? Look at how simple he trades. He just goes for 1R, 3.9 profit factor, 85% win rate. This is the golden standard of simplicity. And so I know sometimes I overcomplicate it because I do see trading on a deeper level than just a simple inversion and whatever. But at the end of the day, what do we care about? Profitability, right? These simple inversions and understanding the liquidity is a very important part of it, right? You can't just take an inversion and not understand the draw on liquidity. But if you understand, oh wow, this is a huge consolidation, there's going to be stop losses here, I'm entering at a premium relative to those stop losses, that's all it takes. That's all it takes to be profitable. So once again, guys, sometimes that's why I like inverse value gaps a lot. Sometimes it's all you need is simplicity. But my personal style is understanding things at a deeper level. Anyway, let's continue on with the market recap. And also I wanted to talk about this trade. I think this was an amazing trade. I'm going to pull it up from my back testing today as well. So shout out Sotep for this, or Max. And yeah, essentially what happened is we were in a deep premium. Check this out, right? We're in a deep premium. And we get a simple inversion in 3 candles with a giant range below. When this happens, guys, this is not going to act like a gap. This is going to be like a void. The market's going to drill down through this. So I'd obviously scale out right here. But pay attention, where does the inverse value gap occur relative to the rest of the market? Where are we relative to the rest of the transactions in the market? We're in a deep premium. So since most people entered the market over here, that's where we're going to target. That's going to be a giant liquidity pool. Once again, understand where you are relative to the rest of the transactions in the range when you take your inverse value gap. I think that is very, very key. Then I also want to show how, let's say that wasn't obvious enough for you. You were a little scared. Well, let's say that means maybe you just had a little bit more patience. You actually put a limit order at the volume imbalance after the inverse value gap. Because, once again, the model is still valid. It hasn't been invalidated. And so we already got the inverse value gap. You're just saying, okay, I'm only going to enter if we retest this volume imbalance. And I'm only going to enter on a little bit of a retrace, stop loss in the exact same place. I call this the Jan entry, right? Simply waiting after we already get the inverse value gap, but putting a limit order for a retrace, right? And you can see that volume imbalance right here. You see that volume imbalance, right? You see that? See how perfectly we react off of that? That was just insane perfection, and then straight down to the liquidity pool. Once again, scale out, but shout out to Sotep for this one. I think this was a really good trade, and yeah, I don't know if I would have taken it, but I liked it a lot. I'll show you the trade that I think the most likely trade I would have taken, because once again, guys, I did not get on the charts today. Just kind of going through a little reset. I'm not going to be using Apex anymore. I'm thinking, hold on, let me talk for a second. I'm not using Apex right now. I'm thinking right now, my trading style, it doesn't make sense with Apex. Plus, Apex has just not been responding to my support emails, and it's been getting incredibly frustrating for me because I've sent like 6 emails. They responded to the first 2, and then they stopped responding to me. The reason I was contacting them is because my account had been on review. I couldn't buy any more evals, and they did not explain to me what was going on and why, and it just got to the point where it was incredibly frustrating. They would not contact me back. So I just said, okay, you know what, with that, I'm not going to use Apex anymore. So I'm done with Apex. I don't know why that happened, but just thought I'd let you guys know that. So I'm liking Top Step a lot. I'm going to slowly, I'm going to do one account at a time because I don't want to spend a ton of money, but I'm going to do probably 150K at a time, one per month, and hopefully start to scale some Top Step accounts, but we'll see. And then also, I'm going to start a very small personal account, and hopefully you guys can see me start to scale that, right? I'm excited. I'm going to start this out small. It's going to be just a small account. I'll grow it over time. So just thought I'd let you guys know what's going on with that. But anyway, this trade, right? I think this is probably the most likely trade I would have taken because 15-minute gap, giant accumulation range, sweep, change state. And in this situation, because of momentum, I would not anticipate this gap to be broken, so I'd enter on the close, and then you could take profit here. It's kind of a specific situation because, you know, there's a decent chance I'd go break even, which is fine, but in this specific case, if you didn't go break even, the rest of the TPs would hit. And then if you measure out this leg from open to the low, one standard deviation up marks out that high. So just thought I'd show you that. But it's kind of cool because all day was just AMD over and over again. First we had this AMD, then we had this Accumulation-Manipulation-Distribution. Once again, if you guys don't know what AMD is, you're going to just look for, there's going to be an obvious range. It's going to build up stop losses on the opposite side of the range. The market's going to pop above one side, and then, since we know that there's stop losses on the other side of the range, we enter targeting the opposing side of the range. Our trade needs to be on side with distribution. That's what I mean when I say our trade needs to be on side with distribution. We got to wait for one side of the market to get stopped out. Then we enter targeting the other side where the opposing stop losses are, right? So then it happens again here, right? We have this range buildup of liquidity, buildup of buy side liquidity, right? We pop below the low. So now within here, we look for an entry to target the opposing side of the range. Another good entry actually that is aligned with this, right? Where you can take a trade within here. And I think there was SMT here. I'm not actually sure, but I'm pretty sure there was. Another trade that I would have considered taking within here is, there's a couple different ways you could take this, but this super simple inverse value gap, right? Where we pop below the low and then get a 2-minute inverse value gap. I think that's clean. And you could have also taken it if you weren't sure if this external gap was going to break. You could have waited. But for me personally, I would honestly have conviction in that external gap breaking because of the way we pop below this low and the liquidity above. It just makes sense that this external gap is probably going to break. And then once again, if you don't know what an external gap is, it's when there's a gap that you have to get through to get to your target. So we had to get through this fair value gap here to get to our target. And so you don't want to see a gap between you and your target, but here I was anticipating this to get broken because we had just a giant chunk of price action right here to go target. And also this happened in the Hydra macro, right? Key time. And if you guys don't think Hydra macros are real, once again, here's another piece of evidence of showing how precise these Hydra macros are. If you don't know what they are, they're specifically 20 to 40 of any given hour. And they're just like the regular macros, 50 to 10. And they're really nice, guys. I don't know why other people don't like them, but when you have it line up at that time, when your trade lines up at that time, between 20 to 40 of any hour, it's going to be a higher probability time for a liquidity run, right? So you can see, bang, lined up with that time, and then what happens? We go to our drawn liquidity. So yeah, there's lots of interesting things today. On the lower time frame, right after market open, we swept out all these time levels. once again, guys, I think these time levels are so helpful. Pay attention to where they are, because the manipulation all day long, the manipulation was relative to all the time levels. So the manipulation here was below all of our time levels. The manipulation up here was above all of our time levels. The manipulation here, once again, the third time, this was below all of our time levels. You can't see this on the chart, but this was below midnight. This was below 8:30. This was below 7:30. This was below 9:30, right? That's how you can tell if the manipulation, you're using time as a reference point to determine if we're actually manipulating or not. It's super powerful. Just try it in your charts, guys. Super, super powerful stuff. And I guess other thing I'll say is, for bias for today, the reason you could have been bullish is, well, we have a giant SMT here with, it's not with the actual low of the previous week, but with a low from the previous week. So since it's not the actual previous week's low, but it's with a previous week's low, it's a partial previous week's low sequential SMT. So a sequential SMT is when you have SMT with a previous week's low or previous week's high, previous day's low, previous day's high, that kind of stuff, right? But since it's not with the actual one, it's partial, but it's still higher probability than just a regular SMT, right? And then basically what I was thinking going into today, and I wasn't on the charts, I wasn't trading, but what I was thinking is, look at this 4-hour inverse fair value gap, right? Delivering from a fair value gap here. So delivering from this gap, we get this 4-hour inverse fair value gap. So using that as an idea for the higher time frame, where's the fair value gap here? So 4-hour fair value gap. Once again, I'm kind of combining. I'm combining these two candles into one, and then I'm conceptualizing the gap. I'm not using the actual gap, but you could use it as, you can mark it out like this if you really wanted to, right? But I like to just conceptualize the gaps. So 4-hour gap, and then 4-hour inverse fair value gap, and then because we have these low resistance highs, we got SMT. We essentially swept out. We swept out this low. I was thinking, okay, I think that the market could be drawing to go towards these low resistance highs. So that's kind of what I was thinking going into today for bias. And as well, it makes sense in terms of our weekly profile, because Monday manipulates. If Monday manipulates, Tuesday, Wednesday, and Thursday are likely to expand. This is like if you guys don't know the weekly profiles, the most basic obvious one is Monday is going to go down. This is called the classic expansion week, where Monday goes down, and then Tuesday, Wednesday, Thursday expand, and then Friday retraces. This is a weekly profile is just a type of week that's more common than a random week, right? It's just statistically more common than just random week. It's a phenomenon that occurs in the market over and over again. So it's a type of week that you can expect. So like I said, Monday, Tuesday, Wednesday. Monday manipulates, Tuesday, Wednesday, Thursday expand, and then Friday we get that retracement. So our objective is probably this low resistance liquidity, so I don't think we'll get a retracement until then, but I think that we could go up for those low resistance highs. We will just have to see. It also kind of depends if we inverse this, which we did. This 12-hour did inverse. So okay, anyway, with that, guys, I hope you enjoyed this video, and let's just all keep getting better and stay locked in, and I'll see you guys in the next one. Peace out.